This is Eric Muad with Muad.com again. Let's take a look at two examples for the best times to buy this wedge breakout. I'm going to bring back the Silver Trust iShares ETF. Notice again, the best times to buy a wedge breakout is when you have a failed move above 50, and then it's coming back and confirming that move. So usually you'll get a daily close. You'll see this. You'll see a daily close above that, and that's going to be your indication that there is a new move or a new change in sentiment. So actually the bulls want that. You are moving above 50. The mathematics on the daily dictate that your average move is going to be to the upside, and that did move silver, this ETF, from 1450 all the way to 20. If you are timing it, then that was a place for entry. And then we come here, and I showed this. We form a small wedge right here. This time, how you get out of a stock. Once you've established that there is a trend on the RSI, wait for it to form a wedge, and it formed a wedge with that top and those two tops here. Let me draw that again. So the wedge was around there, and so when we broke below that, that was a sell signal and a time to get out. The next time the stock was a buy, so you just let go. And the next time you see the stock comes, it settles down, it starts establishing this RSI lows line, and after some attempts to break out, while it's still now notice there's no point right here. There's a lot of gap, so there's no wedge right here. But here we see that it's forming this lower trending RSI top lines and upward trending RSI lows line. So we have a wedge, and then again, so we are moving out of a wedge breakout and again above 50, and we had a small move that moved the stock from around 17 to 19. But the point of it is you're not losing money. Actually, the trade is in your favor, in your direction. And then again, we see we form this. So this line comes, and after the stock moved higher after this wedge breakout, we come back and we find support on this line. So we have a bigger wedge formation here, and when that was broken right there, that was time. Again, you see we are moving about 50. We failed, and now we are confirming that we want to stay below 50, and that's usually a sell signal. When a wedge is breaking down around here, moving it deeper into the lower 50 area, that's a time for you to get out. Now let's take a look at SOLF, a solar play. Now you can see these big spikes here to here, here to here, and here to here. If you follow the dotted line, correspond to areas where the stock was moving out and breaking out of wedge formations above the just new move to above the 50. Another wedge breakout here. You see this wedge, and now we are above 50. And we are moving above it on a wedge breakout. A very strong indication to buy the stock. And the stock did actually move from around $15 all the way to just under 30. So it was really like a 80-90% move in 1, 2, 3, 4, in almost 6 or 7 days. Big move. And you can see, if you just play the wedge breakout here and nothing else, if you don't know anything else about the stock, anything like that, your stock moves from around 14 all the way to $40 in about a month. I mean, that's big. If all you're using is that indicator right there. And then again, another buy signal was when the stock. Now here is where I was trying to explain to you. Sometimes some stocks will move from way below the 50. This was, let's say, in the 30s. This wedge, the green line, and this green line, the wedge breakout. It was a buy signal. And usually they don't do as well. But this stock has a tendency, if you look at the length of the RSI from here to here was very steep. Again, and even the drop from here to here was very steep, continuous movement. And again, this little blip here, but the stock had a straight move in the RSI. So sometimes when you look around at the history of the stock and find that it has a tendency to have long periods of RSI movement, like in this example here, this example here, then when it's breaking out of here, the probability or the odds are it might repeat that. So you can take this as a buy signal too, based on past history. Remember, we are still using the wedge breakout to give us a buy point, and now we are using past behavior to see whether we can even get in when the breakout's really oversold. So that was a buy signal, and the stock did well actually. I missed it, moving from around 12 all the way to just under 22. Good move in a 1, 2, 3, again in about a week. So that's a 70% move or something like that in a very short time. And then again, let's look at the red wedge breakdowns. You see, we have this, we are oversold, and we know we're gonna give back some of the gains. You draw a line once a trend is established over here with the RSI lows, and once that is broken, you get out. And that did move the stock from around 38 all the way to about $8. So that was really a sell signal, time to get out. And again, you see this wedge formation here. This was a serious break because it's now breaking down out of a wedge and down below the 50. And that did move the stock from around, I would say 21 all the way to 12. So those two examples will kind of help you understand when is the best time to buy. And you can use past behavior to see whether you can take advantage of some situations. Again, this is Eric Mwali, Mwali.com. Peace and blessings to you.